You got anything straight up, mate?
I can talk about some stuff actually. Yeah, nothing to.
Okay.
Yeah, I can talk about some stuff if you haven't.
Well, there should be nothing pressing, only the pound trade. And of course, we update the Aussie trade that we got into on Thursday night
Yeah.
and see how we go.
Okay.
All right, we should be live on YouTube. So happy new week to everyone. It's great to have you on board as usual. This is Learn to Trade live and free on the UK Open, and it's Ash and me as usual. G'day, Ash. How was your weekend,
Yeah.
bud?
Hey. Yeah, but pretty good, mate. Pretty good. I think we had a very nice day on Sunday actually. Saturday, just getting into the flow of having a bit of time off, I think. But Sunday was amazing. We've had really good weather over here recently, so we met some friends in the park and try to practice a bit of social distancing. Even though I have to say, I think it's over. I think in this country we are all going to now be exposed to it, so it's just going to be a question of whether you are strong enough to fight it off now. The people have completely just the government has opened the doors on people contact, the contact and social distancing. So we attempt to do some, a little bit of, I guess, safety. But when it
Mm-hmm.
comes down to it, I think we're done over here now. I think everybody's going to get exposed to it. So we went to the park, and inevitably we met some friends of ours that have also got a little girl, and obviously they don't practice social distancing. So it's one of those. But she it was kind of getting to the point that she needed to see somebody small. But not said anything for months and months, and then on Thursday she said, I'm a bit bored of playing with you two, effectively.
I love
No,
it.
okay,
How old is
charming.
she?
All right.
Three, yeah.
She just 4 a couple of weeks ago.
Oh man. Okay.
Yeah, yeah.
Cheeky
So
little bugger.
yeah, yeah. She's all over that, mate.
G'day,
All over
sweetheart.
it.
LT Shukri. How are you? SF. How are you? Good. Shukri, I'm always on the other side of the boat, mate. But I will absolutely be going through that today because we are getting to the point where I start to get a little bit itchy because we're
Yeah.
getting very much close to points that are more than significant, in my humble opinion.
Well,
So,
I agree, mate. Do you know what? We should probably have a quick chat about the footsie because I think there is an available short today.
okay,
So we should probably let's have a look at the footsie and see what we can have a look at. Now, I might need to do a little bit of management on something depending on when it opens up. I've got an airline stock that I'd quite like to hedge against a little bit, so but might need to get to that later. But if we share screen over here, then let's watch the footsie open here.
you should be able to do that, yeah?
Host has disabled me sharing. I don't know who the
Oh,
host is.
that stupid bloody thing again.
Silly
Okay.
host.
Dipstick. Okay, so we go there and we go there and we go there. And that should make things all very well.
Great. Okay. Yeah, let's have a look at this. I've got also a trade that I can bring to you guys as well. But yeah, the footsie looks a little bit weak here. And we have had some fairly substantial moves to the upside. So I am watching to see whether I've got the right chart up there. Yeah, I am watching to see whether there's maybe an opportunity to sell this off. Now let me just have a double check on what and where we could do that. Yes, definitely a selling opportunity, definitely a sell today. So let me just set my stuff up over here because I'm going to need to sell this as well. Okay. Right, so I'm just waiting for a little bit of a bounce back, and then I am going to take this trade. So let me just see where we need to bounce back to. I guess it's going to be the 64, but I'm going to watch it on this chart here. Already didn't give ourselves enough time. $44, right? So it's going to be at 54. I'm going to try and sell this off. And I will write these up in a moment, but let's just put this in place. You know what? I never know. I have to juggle between futures and the cash. They slightly do it differently. Okay, so sell limit, and I'm going to go in at 54, 64, 54. So there it is. Yep, yeah, that's all right. Now the stop is going to be above the trend line on the hourly here. So let's bring this up here. Oh no, what have I done there? Oh, I'm going to put the stops in place in a minute. Let's put this in at 54. For 64.54 is going to be our sell price. Stop's going to be at 64.80. Now, I'm going to have to give you those verbally just while I see if I can get into the trades on my other accounts here. Okay. I need a little bounce up. Looks like it might take a little while. Yeah, I like this. I like this. All right, let's see if I can write these in. Okay, so the trade level is where shall I write it down here? So it's the UK 100. Sticking that up. UK 100, and it is a sell. Entry is at 64, sorry, 60. And then we'll get to the pound, mate, and then we'll come back and talk about this. 64, 54 with a stop loss at 64.80. So there are our price levels. Maybe we won't come back, but let's see if it'll bounce back up for us. We might end up lowering that down as long as I can get a bounce back up again. I might have to lower that down just a little bit, but it looks like we've got a bit of selling pressure today. So there we go, mate. You grab the screen back. We'll see if we can get into this trade, and then we will talk about what some of the reasons are behind it.
Rightio, very quickly, we are getting towards our entry, and the sell level on the pound breakout trade today is 1.2673. We're about 7 pips away from that, so no real urgency, unless you're a fumbler like me and takes hours to get the trade on. And the stop loss on that is 1.2727. So the buy becomes 1.2727. And the stop loss on the buy is 1.2673. Those of you in for the first time, what we're attempting to do here is trade a breakout on the Open of London session. And thus far, that hasn't occurred, of course. We're trying to catch the short here, and we're trying to catch the long here. And we use the stop loss for the short as the long entry and the stop loss for the long as the short entry. Now, once we get triggered, we cancel the other. So if we get triggered short here, we'll cancel the long, and we will switch to a 15-minute chart where we will trail our stops with 2 consecutive selling bars if we go short, or 2 consecutive buying bars if we go long. Just to explain that a bit further, let's go through Thursday's trade, which was this one here. We entered on, well, down here somewhere. I can't remember the entry level, but I can certainly check that. Okay, we entered 10 pips below that bar, which was 1.2514. 1.2514. We'll mark that on our chart. No, it wasn't 1.2514. Oh, yes, it was. It's all right, I'll catch up, guys. Don't worry. 1.2514, which was there, which wasn't a great entry by the look of that. Again, now, once you switch to the 15-minute chart, it looks like this. You don't count the bar that took you in, which was this one here, but you're looking for 2 consecutive selling bars, or black candles, if you like, or red candles, whichever format you're choosing to use. Or if you're obviously using OHLCs, then something that closed below its open. So what we've got here is this bar followed by this bar, so both selling bars. We trail our stop from where it was, which was up here somewhere, down to above the first of the 2 selling bars. So here, which is where your stop loss should have trailed to after this candle was formed. And that was as good as it got, frankly, because we got taken out with this bar here, which means we lost about 4 or 5 pips or whatever it was. I can't quite recall exactly what it was, of what the risk was. We got in there and our stop loss was there, 48 pips, and we lost 4 or 5, so 1/12 of whatever you risked. Yeah, right. We won't even worry about that too much, but it wasn't a win, and that's the most important thing. We're looking for winners here, not losers. And we could do with one today, couldn't we? So let's see if we can start the new week with a winner. We don't have an entry at this point, so we will continue to monitor that, obviously. If I'm looking to trade the pound today, other than as a breakout, I'm probably thinking, okay, I want to see it come back and have a look at the top of this range, which it broke on Friday, not decisively. It went straight to this, pretty much where our long entry is today, to this support level, and retraced off that very, very quickly. I would suspect that something called NFP had a lot to do with that. And as you say, Helen, wow, what a number. What a number the NFP was. Quite crazy. And don't ask me to explain it. You're just talking to the wrong bloke. I have no idea why that would be the case, nor if it's correct or accurate or whatever. If somebody pressed the wrong button or got the decimal place in the wrong place, I don't know. I really don't. Ash will probably have a far better idea on that than I. But I've got to be thinking pull back to the daily pivot in the first instance, and then it's a little bit tough because I'm so bearish the US dollar. But I do think there's time for a breather, and everything to me looks that, well, if not a little bit, a whole lot overbought. Pound comes into that category, so I probably want to see something retrace, at least back to a breakout point. I mean, this is one for the pound, but probably this level here is more the breakout point that I'm thinking of. And that's around about 125, about 170 pips down this way. So I'd be looking for at least that before I got terribly interested in jumping back into the pound long at this point. So we'll leave it at that for now, and we'll go around the grounds when Ash is done with his analysis and update on the FTSE, and a lot of questions.
I'll tell you what, mate, if you could just give me just a little while longer, only because I've got to try and get my other accounts done.
All right, happy days. I'll go through some of these questions. So, Shukri, from you, when do we go to the other side of the boat? As I said, I'll get to that, and I'm on the other side of the boat more often than I'm not. So I'm in quite comfortable territory as we get near to that boat tipping towards the water. What else have we got? What a sad world of affairs in incredulous NFP numbers. Yeah, look, I'm not sure why it's a sad world of affairs, Helen. I think the dollar's a sad world of affairs, to be fair. But yeah, it's a crazy number, no doubt. Wink, wink. Yeah, it may be. Trump is gloating as usual. He has COVID-19 is a hurricane. Close down, then open. Couldn't believe what he said the other day. This is a great day.
I'm
This is
triggering in just
Yep.
a couple of pips early, mate, because I want to make sure I get it. So my FTSE I'm taking here. I think it probably will go at the 54, but I don't fancy missing it. So I've just triggered that trading, and I'm pretty much ready to go when you are, mate. So I can talk about the trade.
All right, mate. We'll talk about Donald Trump and his great day a little bit later. Atrocious thing to say. Anyway, go for your life, mate.
Okay, so I've decided to get in because I am bearish for the day, and it came close enough to entry, and it might still pop back up there, but that's close enough. So you know, do with it what you will. If you want to wait for the 54, that's fine. I've got in at 52. So or around about 51, something like that. 51, yeah. So it looks like you might still get your 54 there. Close enough. So anyway, we can set our stops now as well. And I might just get myself edged in here. So yeah, I'll probably add another position here. If we pop up a little bit more, I'm going to add one more in here. So stops are up here at the 80 level, 64.80 level. So let's talk about what's going on with the FTSE, and then we'll get into another couple of trades that I quite like, and one that I'm in already, and you guys should have the opportunity to get in as well. So we'll start with the FTSE because that's where we're at, and it's really just kind of having a look at these charts and sort of thinking, well, we are incredibly high up here. We are on the weekly levels at this level of resistance. Now, last week I was talking about an area that's in the US show. I stayed in without the stop loss on one of the trades, but that eventually has to come out because, you know, when you get the opportunity to come out the trade, then you have to take it. So the market dipped a little bit, so I didn't have to stay into it. I was going to stay in it at this point if I needed to. If it popped up, some of you won't understand what that is because this is the UK show, but in the US show we were discussing that. So now at this point, it's almost a better position to try and get short at, because the chances of this coming back and testing this level here looks like a pretty good level. That's where the gap is, just down here. The chances of it coming and testing that level are high. You know, they're not fairly high, they're not average, they're high. So can we find the very, very top of the market and suggest that the top of the market's here? Well, not necessarily. Not necessarily, but when I consider what else that we have this week, and when I consider what has driven this market to the upside, in my opinion, this is about the Fed and it's about the liquidity that is in the market, the money that's in the market, and you know, we'll look at this on where are you on the news that that is due out this week. And when we see the news that's due out this week, we have oops, let's go up next. We have Lagarde out later on. Could be a big deal, but I don't think that'll be the breaker. We got a pretty a benign day on Tuesday, so we can hopefully hold through that day. But this is the day, you know, it's the FOMC rate statement, and it is also the press conference from the FOMC. The big question really that the market has to ask itself is, if the stock market continues to rally at this kind of pace, and you know, with the kind of moves that we've had, then why do the Fed need to continue to add stimulus? And if they don't continue to add stimulus, will the market continue to move up? You know, if they decide to put the brakes on, then you know, the market is effectively, in my opinion anyway, kind of rallying pretty much on hot air. Now, I agree with you about the NFP number. It was quite something, and it was quite something mainly because it was such a huge beat. But when we look at it, let's have a look back here. When we look at the actual number, what did it really tell us? You know, the previous unemployment rate, or the non-farm, whichever we look at here. But let's look at the non-farm, because it was a massive difference. But this here, when we look at the graph here, oh, it doesn't really help us out, that, does it? Doesn't really help us out. But in fact, we're going to have to look at this number, because an employment change of this, when you're coming from such a low base, yes, there were many jobs added, but look how much they've got to still recover. You know, there's no real positive out of this. All it's done is hopped up from maybe
I'd like
what
to
is a
know
low
what
base.
those jobs were, mate. That would interest me incredibly. And if it was,
Yeah.
you know, it might have been National Guard that's being put on. Does
Yes.
that count? You know?
Yes. Yes.
There's a whole lot of questions around that one for me.
Well, the other question is, does this basically tell us that they've stopped, you know, that they've decided, you know, there's no more, or there's less firing going on, there's less redundancies going on. So, you know, the fact that the jobs created outstripped the redundancies is a positive, and it does potentially show us that we might have hit a bottom. However, when you've got an unemployment rate at 13.3, this is the real graph I think we should be focusing on, because there's still a huge amount of unemployment in America. You know, you can go right the way back. So yes, better than it was before. This was in 2010. And there was a 10% unemployment rate. You know, I don't know how far we'd have to go back, probably forever, to find an unemployment rate which is 13.3. So rather than taking it as a relative number, why don't we take it as a number in its own right? And if we take it as the number in its own right, that is still it's a horror show. It's still an awful number. So what is it telling us? Well, it may be telling us that the market is bottoming out. I would certainly accept that. But it doesn't mean that that the price is is it genuine value up here? And when you consider, you know, the charts, are we on resistance? Yes, we are. Does that mean we got a sell zone? Yeah, probably. You know, this is on a daily chart, but when we look on a weekly chart, then the weekly chart does suggest that this is a retest, it's closing the gap, and this is a sell zone. So does that jobs number justify us continuing to move to the upside? And I would suggest it doesn't. And the other thing, as I say now, you know, that has to come into play is the Fed. So if we look for the market, because at the minute we are trading the retracement leg. There's no two ways about it. We're not trading bearish. We're not trading downside. We're trading a retracement. So when I'm looking at this, I'm thinking, you know, the jobs number was better. You know, the fact that we're creating jobs. Yes, it's better. Is it still bad? Yes, it is. So does that mean that this is good value here that we should go higher from? Or does it mean that jobs number maybe, you know, puts us in somewhere in this area, or maybe there's you know, possibly another trend line along here that we should be looking at, which puts us in just a little bit lower, just down, you know, into this area, which might find another horizontal area over there. Is this you know, fair value while we find out what's going to go on with the Fed and other government action? And I would suggest it probably is. So that's the reason that I'm looking for sells today. Now, it might be a day early, it might be a week early, who knows? But I still think this is a decent area to start looking to short the market. So that's my thinking. That's why I'm interested in the short today, and that's what I'm trading. So not a great deal more than that. I don't think there's huge technical reasons to go short on some of these entry time frames. You could argue that the hourly has possibly broken down this level here, which I think it probably has, and that's the reason that I was looking at the price. Looks like a possible triangle pattern. It looks like it could be a number of things. This, if that was the case, would probably lead us down somewhere around this point here. And that is at 6,400. Now let's have a look at what that looks like on a daily. Looks like the first level. It looks like the first level of potential support. So it's really going to sit on top of the gap. So that's what I'll aim for. I'll aim for 50 pips to the downside, take it off there. If it goes through, you know, if this, so the idea really with managing this trade is that the target is going to be, so target, the first target is going to be, and these are always soft. Target is going to be around about the 6,400 level. So we got a entry price at call it 6,450. We got a stop loss at 6,480. And we got, so now these are general numbers, right? So you know, we got 30 there, and we got 50 there. So at this point, we can take, you know, some of the profit off the table, possibly. If it comes down to that point, we can take some of the profit off the table and move stops at break even, and then we'll make on this. Or we leave stops where they are if we really want to try and find that high, and we still make money on the trades. It's not quite a 2-to-1, but it'll get close. And actually, it probably is about a 2-to-1 because this isn't 50, is it? It's between 52 and 54, depending on where you got in. So so it's close enough to a 2-to-1 to justify it. So that's going to be the first target around about the 6,400 level. Now the other trade I really like, the other products I really like is gold. I've taken a trade. I took a trade in gold. Let me see. I don't know how that's going actually, but I have taken some profit in gold. And this is the trade here. Let me just bring in. Let's get this out of the way. Now, I quite like this to the pivots. You know, I took a trade here on Friday, and I did take some profit off the table down here. But I still think this is valid. You know, I still think that there's a possible another entry to the downside here. And it looks to me like that's going to run right into the trend line. And you could do this on any time frame you want. I quite like the 4-hourly. Quite like the 4-hour, the potential of a 4-hourly drift to the downside, because it looks to me like we've had a really good breakthrough here on the 4-hourly, and now we're just starting to move back up. So again, we're in retracement leg, in my opinion. So if this does become the retracement leg, then all we need to see is just some weakness here, and weakness, or you know, is going to be expressed in a bar. It could be something like that. It could be just a you know, a nice high test bar, something like that. So I'm just looking for some weakness, but in this area, that to me looks like the sweet spot for gold. So I'm looking at around about the 1700 level. You know, it's got a lot to like about that particular price point when you consider, you know, what could be some of the confluence here. And we'll bring up a fib as well. I don't always use them, but we'll bring up a fib. So what do we have? We have firstly, we have a trend line. So that gives us some confluence to potentially give us some downside. Secondly, we have the weekly pivot. And thirdly, we have a round number in the 1700. So so there's already kind of three things starting to stack up to suggest that this would be a really good point to try and look for some downside. Now we'll bring up a fib and see what the fib looks like. First, I'll take this one. 61.8 retracement is going to be to 1702. That's close enough. That's close enough. That would certainly be close enough to give us a bar that tests and comes back again. So if that was to touch that point and then give us a rejection, that would be close enough. That would probably be the very last saving area for any upside in gold. If gold was not able to get through 1702, then we should be in pretty good shape for some downside. Now we'll just double check this fib as well and see if this this suggests anything else. Let's have a look at this. That looks even better. 38.2 retracement is going to be at 1699, and that's from the high to the current low. So there's a couple of reasons that suggest to me that that the gold at 1700 is a decent level. So that's the other thing I'm watching out for. It's currently at 1693. So a $7 retracement in gold to me would be a decent area to start looking for some downside. As I say, I'm already in one, so I've taken some profit down here, and I'm going to add at the weekly pivot. And finally, the last thing that I quite like, you know, it's difficult really because we've seen some dollar weakness, but I quite like this this dollar CAD for, sorry, this dollar Swissy for some upside, mate. I don't know if you've been looking at this one at all, but I do
Yeah,
see some.
it's on the radar, but I find it very difficult with the yen and Swissy at the moment because we are so risk on. They
Yeah,
are as weak as you know lolly water,
yeah,
and I don't see that being a long term thing in this environment. So
yes.
it makes it tough for me.
Yeah, no, I can appreciate that. I mean, what have I? Let me just make sure I do my analysis correctly here because dollar Swissy.
Because I'm so weak, the dollar, you know.
Oh gosh, hold on a minute. I
I'm
think I'm
so bearish the dollar.
sorry. I'm looking at this on the wrong time frame. I want the short in the dollar Swissy.
Sounds better.
Yeah, I was just looking at this. I just checked out my the time frame I was trading, and it was this one. The time frame I was interested in. Sorry, is this one I'm interested in. I quite like the fact that we've broken through this area. I quite like the fact that we could potentially have a shelf here, which would suggest that there is, you know, the lower high going on. Looks like the retracement leg is just about in the last throws. Where's this trend line? Probably around about there. I mean, it's difficult to absolutely find it because there's a lot of tails, but looks like some fairly accurate touches. So anything I would suggest in this area here. Now that does kind of blow gold out a little bit, but gold is as much as anything else. It was a decent setup, but that does mean somewhere around here between 9645 and what is currently 9686 is my sell zone, and I'm just looking for signs and signals in here now. If we bring in the shorter term timeframes to see what might have to happen, then what would need to happen is that this particular trend to the upside on the hourly would have to be over. So I'd be looking for a break of some sort, a break and a hold of some sort under this 96.26 level. So there's a few things to watch out for. But what I like about this is that we could be out in front, you know, and if we're not out in front, it's going to continue to the upside. No big deal. So, but if there's a turnaround on one of these shorter term timeframes, I quite like dollar Swissy for a short. Now, if we look at this on a weekly, maybe it doesn't look quite as attractive looking at this particular bar, but that wouldn't be a major issue if we go into either next week on this one or possibly even the week after. So that actually looks like the trend line there. That looks pretty good. So we can really look for this one for quite some time. You know, this could be an entry, or it might be right the way up to 97. Actually, it might be up to 0.97 that we're still looking for downside in the dollar. Now that may well coincide with touching this area again. Yeah, that's going to be that. I think that's the sweet spot for me, mate. So dollar, there's no entry there, but I've got this one, I guess, on a watch list for a short. In dollar Swissy, and I'm looking at 0.9700, I guess, somewhere around about there. So we're looking at these two here. So that's what I got. I did have a look through the other charts, and because a lot of them it would be reliant on the retracement leg, I wasn't quite as keen on some of the others, but you know, for this particular one, I quite like it. But for some of the others, I was looking at the euro pound again. We talked about this last week, and I was a little bit skeptical about some of the upside potential. I think trading it the way that you traded it, mate, was the only way possible. I think if you tried to get this on longer term timeframes, then you'd have been in big trouble. I'm sure when you saw that go beyond your first take profit area, you were thinking, oh man, I could have stayed in. But actually, this just wiped out the previous 2 days action to the upside, and now we're back really inside the pattern. So you know, this again, I think is an interesting chart in the respect that trying to pick the correct direction at this particular point could be a bit tricky. But if it was to dip down just a little bit, and get somewhere around about here. So, you know, maybe there's a nice level along there. So if it dips down into this area, that could be more interesting for further upside. If it was to go through, then it might start creating a head and shoulders. So I think there's certain things to watch, and considering the potential for Brexit negotiations to go either way, the pound versus the euro could be a really interesting trade. If it goes badly for the Brexit negotiations, I'd expect the pound to weaken. And if it goes well, I'd expect the pound to strengthen against the euro. That is, and I think that's quite important, because, you know, if we're looking for weakness in the in negotiations, you'd expect a poor result for both, and maybe them go nowhere. But that hasn't tended to be the case. You know, what's tended to be the case.
We got out of that at the weekly pivot, I think, didn't we? From memory.
Yes, you did, mate. Yes, you did.
That's right.
Yes, you did.
Yep.
No, I'm just going to add to this.
Yeah, it worked well, didn't it?
It was great. It was great. Right, I'm just going to get another short in this FTSE trade. Making sure I'm getting it on all my accounts here. Where are you? Sorry, mate, it's just got hidden. This is the only problem with having so many accounts. You're going to end up looking for things.
Just whistle if you want me to take over, mate.
No problem, no problem. What contract am I in? Oh, gosh. Oh, that should be all right. Here we go. Over there. All right, there we go. All right, so I'm just adding to positions with the FTSE there, and I'm just going to slide this stop up into the same place there. There we go. So that's pretty much me anyway, to be honest. Okay, sorry, I haven't seen any of your questions, guys, because I was just focusing on that. So let me just get to these now. Good morning, by the way, to everybody. When you go to the other side, Helen. Good morning, Helen. What a sad world of affairs. Incredible. Yes, crazy went up too high. Yes, I think the market is up too high. And Donald Trump is, you know, he's pulling troops out of Germany as well. So there are other things afoot. The US dollar should be more bullish if the Fed can stop its operations. Yes, I think that's true, Shukri. I think if the Fed, and they may, you know, and this is the thing, and I think people need to be really careful here when they're kind of buying stocks, because if that was to happen, you know, if the Fed was to reduce some of its operations, if it decided that that the market is really doing its own job and they don't have to be involved, then we might well start to see some of those retracement legs, you know, going on, which is what I'm playing, I guess, you know, and I'm not necessarily playing the fact that they're going to reduce it. What I'm playing is the fact that they may, and this will potentially make some of these traders in this area a little bit nervous. Let's have a look at some oil. Yes, they expect 19%. So it's better, right? And also NFP is positive. Yeah, I think, I suppose relatively positive from the last read. But you only trade if it touched and retraced, right? Not entered. Oh, yeah, I mean, you should be in on that anyway now. Dollar Swiss rejected 3 times. Yep, cool. Okay, megaphone pattern. Yeah, which I hate. I hate megaphone patterns. They're the worst. Broadening patterns are terrible. Right, let's have a look at oil. Where are we with oil? Where are you, oil? Where's oil on this platform? Yeah, I think I'm on. Is it XTI?
Yep, XTI. Yep.
XTI. The put and call options. You know, we've got to get into that, Shukri. I'll try and get some more ways to play that on the US show, because there's lots of. I've got a friend that works in currencies, and he's telling me that that some of the the options are just going. It's the options that are going crazy. So it doesn't look like people are protecting themselves, but it sounds to me like they're protecting themselves with options. And we could have a look at that. Not necessarily today, because I'm going to need to badger him for his list. I've got to get a bit of inside info. And I will do. Okay, so oil. Let's have a look. So again, it's getting close, if not on top of a potential resistance area here. Now, when it comes to oil, what am I on? There's the trend, isn't it? So if we buying here would be, in my opinion, a crazy man's game. I wouldn't want to do that. I wouldn't want to be buying in this area. But what I would say is that if we're going to start, if we do sell this off, we're going to be trading the retracement leg. And for that reason, you're going to need to see some. You're going to have to. You're going to have an opinion. You've got to have an opinion if you're going to trade the retracement leg. I don't think you can just get into this and hold your nose and hope for the best. I think you're going to have to have an opinion on what might fundamentally move this particular market to the downside. And I unfortunately don't have it, so we can only look on technical on the technical aspect of it. Now, oil is much more likely to create classic patterns like the evening star, morning star, things like that. So this on a daily would suggest to me that with a gap to the upside, if there's enough weakness here, then there might be a possibility that we get a leg down tomorrow, and that would be something that would be of interest. But at this particular stage, I think it's too early. So with the evening star, you're looking for a bar to push up, which is this bar here, a gap to the upside, and creating some sort of small body bar there. And then the third bar is the one that we'd potentially be trading. So we're basically on bar 1, potentially 2. Now we want to trade bar 3 down if we're going to get it. So today looks early, but it might even be non-existent. This may end up, rather than looking, bar 2 might not look like that. Bar 2 might end up looking like this. Who knows? Maybe this is bar 1, bar 2 is gap to the upside. Maybe it does that, which means that it's not going to be a second bar in an evening start. So I wouldn't be too interested in that personally. But if bar 2 does give us an evening star style bar, which is the gap forward, and it does create that kind of shooting star thing, looking at anything like that, then I think we could start looking at bar 3 and seeing if there's a potential opportunity tomorrow. But I don't have fundamental information about or a fundamental opinion about oil, which is the reason that I would find it a little bit tricky to trade a retracement in this. But you are trading a retracement leg, and you have to be aware that when you trade a retracement leg, you're taking higher risk. The risk is greater, so you've got to make sure that you manage the money correctly. Maybe scale in, maybe don't go in quite as heavy. There's a few ways to play it, but I wouldn't want to trade this, the same way that I'd want to trade an extension leg, because if you think about the structure of a trend, then we're looking for higher highs, higher lows there, higher high, higher low, higher high. You're trading it to get back to a higher low to go up again. At this stage, this is the trend, right? So you either wait for this point, or if you really like oil and you want to trade some of the legs in this, then you've got to get some information which suggests that we are in retracement and not just in a holding pattern up here, or some sort of sideways movement, and that I would have thought would have to come from some announcement. OPEC were in agreement, weren't they, to cut further production and hold the supply of oil steady. So that's not particularly negative for oil. Let's have a look at these with pivots as well. Pivots are down there, so it's got some room down. There's no denying that. I'm just going to check out this with WTI, because I look at that more regularly. It's so overbought in this area that a move to the downside may be fairly swift. But I've got to be honest. Yeah, I mean, the one thing I do see here, which does suggest that that there could be some move down, and it's only really a could be. I wouldn't want to trade it long. That's one thing. So that's the reason I'm looking at the short. There may be that. You might be on a bit of a head and shoulders pattern. Now, the fact that it's sloping up isn't particularly good. If this had the right shoulder lower than the left shoulder, that would be better. But the fact that this is sloping up may not even be a pattern. But at this stage, you're trading it into there, which is not very far for a market which has been so buoyant and without any fundamental reason to trade it short. So oil, I'd be less keen on to trade it on the retracement leg. But if that's what you want to do, if you want to trade oil, then I suspect you're probably trying to get the retracement leg more than anything else. There is some further resistance up in this area here, so it's not a bad place to try and take a trade if you believe that it's going to retrace here down to here. Now I've got to be honest, I don't have the belief. We'll check this on shorter, really short time frames and see whether anything started here which would suggest that. 15 looks okay, actually. The 15 looks all right. The 15 is suggesting that maybe we are at a decent level. And this isn't a bad area. Look at this. You've got a potential trend line here. You've got about 3 minutes before you see a bar, which could be an entry bar. And if it's decent enough, then you probably only need a 30, looks like a 30 pip stop loss. And that would lead you down to this low, which isn't too bad, is it? That's not too bad at all. So looking for the short here would be dangerous. But if you correctly manage the money and don't go in too heavy, then you could actually take this bar if it ends up closing at 1043 with a probably an initial target here. And it'd be one of those ones that you would take half off rather than moving your stop to break even, because you're still kind of within the pattern here. If you were to enter here, taking profit there with a stop at the high, you're on a 1-to-1. If you took half at this area here, then you could leave your stops where they were and see if there's any more downside to then potentially start trailing a stop. There's obviously different ways that you can make your money safe. You could move your stops to break even at certain points and keep the whole trade on, but that wouldn't be the way I'd particularly want to play this one. So if you're really keen on oil, then it looks to me like this bar looks okay currently anyway, for some downside bouncing away from this particular high level. But it's short term, very, very short term. That's what I got, mate. That's what I got.
All right, mate. Happy days. That's a fair bit, and that's great. And I think you've just about answered all the questions. I'm quite amazed by some of you guys, how broad a spectrum of trading options, and I don't mean options as in the trading term, but the actual broad spectrum of the things that you guys trade it just amazes me how you keep on touch of it. I honestly don't know, but good on you. Well done. I hope you're making money from it. That's, of course, the whole idea. All right. I've got a few things to have a look at, and I'm going to address which side of the boat that I'm on, Shukri, from your question. Because, as I say, I'm mostly on the other side of the boat anyway, and that suits me just fine. But I want to, actually, I'll share another screen, not that one. I'll share.
Yeah, just pipped out that FTSE trade. I still quite like this. Just to be upfront, I'm holding my FTSE shorts on my personal account. I can't do that on these accounts because they are company accounts, but on my personal account, I am going to hold on to my FTSE shorts. Now, you guys have to be aware, if you're going to do that, then you'd have to accept what's going to happen and make sure that you manage the money correctly. But I did this the other day, and I think there was a bit of confusion, so I just want to be upfront that I am holding my shorts on my own account.
Okay, so you should be seeing my dollar index chart. Yes, you are. Okay. This is really the most important chart that I'm looking at the moment, because the people who are on the one side of the boat are perhaps starting to think that they need to move towards the center. In other words, take some profit or get on the other side of the boat. I just want them to stay where they are for now. That would be cool. And if they did that, we would see this probably, well, what I want to see rather, as they do come back to the middle of the boat, is I want to see the dollar index retrace back up to about the 98 mark. And if that were the case, I think that is where we need to start getting back into, let's trade the others long time. But in the meantime, we're looking to trade this retracement, right? So get on the other side of the boat. That's the whole point here. Everyone's on this side of the boat. We want to get back onto this side of the boat. So I want to trade from here to here if I possibly can. And if per chance this actually reverses, then we can take advantage of that as well. So to me, this is the most important chart. It is at a significant support level, as you can see through here. And yes, I do expect this to retrace somewhat. Now, don't forget, I'm a long-term bear, the US dollar. There's no question in my mind that this will tumble and tumble substantially. You know, we could be looking at 88, in my opinion, by Christmas. That wouldn't surprise me one little bit. So I'm on that, and that's the kind of aspect that I have. So that doesn't mean that I'm bearish anything against it longer term or even intermediate term. But for now, short term, I'm looking for these retracements, and that's what we do. I mean, that's my thing, right? So let's go back to the charts, and every single one of these is probably the same trade, but it's important that we get it right. You know, timing's everything here. We don't want to just go, all right, the boat is tilted in one direction. We need to have that corrected. So we'll just place a short on the Aussie, and we'll place a short on the Kiwi, and we'll place a short on the Euro, et cetera, et cetera. What we need to do is what we do every single day. We just need to wait for a potential reversal off a significant level. Now, where's the significant level here on the Euro? We'll start with the Euro. And we're broken through it, really, haven't we, at the end of the day? So we look for the next most significant level, and that could be a trend line. Gone through there, could be that, right? So we may have hit it. It could be a horizontal level. Where's your best horizontal level? That doesn't look too bad. There's been support through here, resistance through here, and failed resistance here. Man, are we actually there? Maybe we're there. Looks to me like there's a strong chance that we're at that strong level. So what does that mean? That means we now need to pay attention, is what it means. I'm on a weekly chart, don't forget. But here's where I get the levels that I believe are most significant once we've had a big move, and we've had a big move. So there's no point me looking at a 4-hour chart here saying, okay, we're at a significant level. I've got to look for a big picture thing. And the big picture here is telling me we've got a confluence. And that confluence is at around about 113.60. Now that is quite amazing. Well, it's not really, but I don't know if you guys have been around long enough. Probably not in this format where I trade Euro US dollar and have done for many, many years. And that's the only thing I used to trade. So 113.60 is a very, very much a pet level for me, because of this particular scenario here, where we just couldn't get away from it. And every single day of my trading life, I was mentioning the number 113.60, and that, you know, went forever. And even on the way up here, and if we go back in time a little bit further, you can see even back here, 113.60 has been just a massive, massive number for Euro US dollar. And here we are again. So do I expect euro to break through 113.60 without a fight? Not on your life. Don't expect it for 1 second. So am I a short-term, maybe even intermediate-term bear on euro US dollar? The answer has to be yes, but I've got to get the right timing here. And how do I find that? Well, you've already seen that we're at a level that I consider to be significant. And there it is there. I've got it as 113.68 here, but let's use the number 113.60, which is so near and dear to my heart. And there it is. And we pipped it on the way up here. And now are we on the way down? That's the question, of course. All we need to do is what we do every single day. We look for a potential reversal pattern. Maybe that's it. And then we look for a lower high. We don't have that yet. We don't have a significant lower high. What I'd really like to see is price hit both the weekly pivot and the top of that descending channel there. But that's on a smaller time frame. Sorry, that's not accurate. And then bounce off it and give me a lower high around about the daily pivot mark. That's when I'm on the other side of the boat, guys, and I'm pulling hard on the other side of the boat to get it back to level. And where do I look to for that to reverse or to change? Well, it's a great question, really. But it's always going to be the same. I'm going to look for a pivot, or I'm going to look for a significant level, maybe the next most significant level to the downside. And that one there around about 111.40 doesn't look too bad. In that vicinity somewhere between 111.40 and maybe 1200, 1.12 is where that level probably lies for me, somewhere in that clouded price. So I'd be looking to trade that down to there, maybe even this week. If I can get something out of that, then happy days. So that's, there's no point me going through the whole lot of these because they're going to be exactly the same. All I wanted to show you is once we've gone through the most significant level that we had on our chart, which was this descending channel, then we look for the next most significant level that we have on our chart in terms of resistance. And I'm happy to say that is it, 113.60. And we've been there. So we've rejected it once. Get back up with it again and give us a lower high, happy days, or even give us a lower high now in this vicinity. And I'm more than happy to trade it. So that's kind of the theme that I want you guys to take on board and run with if you are thinking about trading my strategy. That's pretty much where I'm at, right? So very, very briefly, there's no trade at the moment. But if you have a look at 30-minute charts and you've got a little bit of a bearish outlook, you're still looking for exactly the same thing. You're looking for reversal and lower high at a confluence area. Even better still, if you can get a break of resistance, that turns out to be false. So what am I looking for here? Looking for the daily pivot. Again, second test, bit of consolidation, back underneath, take out the lows of the day, retest the trend line, and then go short. Take profit before the weekly pivot. And if you get the timing right here, and I'm not suggesting that this is it, then you may be in for a pretty decent ride. But when you're trading on the 30-minute chart, you're not looking for 400 pips. You're looking for 40 pips or 30 pips or something like that, depending on the risk that you take into the trade, of course. So I hope that gives you an overview of what I'm looking for this week. It is exactly that. And back to your point, Shukri, yes, I'm pulling hard for the people to come onto the other side of the boat, but not full term.
Sorry, buddy. Just quickly, I've put another order in on the account for another short. I don't even know what you want to quickly see it. I still really like this trade. I mean, it's thank you, mate. Yeah, I still really like this trade to the downside. So what I've done here is just put a little sell stop here, because I think if it does go through this area, we should be a little bit in the clear, a bit more in the clear. So just to see if I can get you guys back in, if you want to get back in, of course. If you don't, then you don't. No big deal. So I've got an entry here now. I've got the full position here. So the entry is for a short still. And I'm now looking at 64.60. Stop loss is just now above these areas at 64.84. And the take profit area is going to be at 6,400. So if we consider that that we're down 30 on half, and it was about 15 on the other half. So what does that make it? Around about 37 on the full position. So we're down 37. Now, if this one works out, then when we're going to be up 60 on a full on the full there. So it's going to be hopefully a net positive of around about 23. If it works out. Now, if it does take out this low, it's got a much better chance. You know, I could enter this bar here, but the problem is it still looks like it wants to go a little bit higher. So if I enter down here, that stop loss looks a little bit safer there. So you know, do with it what you will. You know, if you want to sort of get into the trade, there it is. But I am entering another short. Annoyingly, and this obviously can happen. We got pipped out by a couple of pips there. Actually, I don't know. Yeah, we literally. Yeah, I think the stop loss was around about 82, wasn't it? So it literally just pipped it out. But I still like the short, so I'm going to go in again and see if I can get my short on. And get into it. This is about making money. You know, going to kind of break a few eggs potentially on the way. I still like the direction. Just the market didn't quite behave the way I'd hoped, but I'm not going to ignore it. I still think there's a decent chance that we ease down a little bit today. Interesting, really, to find that the travel stocks are still moving to the upside after hearing the UK government are talking about a 2-week quarantine for travelers coming into the UK. So I'm not sure how the travel stocks are doing well, but Carnival's still like nearly 5% up. EasyJet's pushing another 4% up. I'm looking to hedge a little bit against that one because I'm a little bit skeptical now. And what else do we have? Royal Dutch Shell, you know, just for Royal Dutch Shell is moving to the upside as well. So oil stocks continuing to do pretty well. I'm not sure where BP are sitting. Where are you? Let me just have a quick look at BP. Yeah, BP up 2% as well. So the oil stock's still doing pretty well. So be a little bit careful, you know, with that that downside potential. It's going to be potentially quite tricky. In fact, let's have a quick look at that chart before we pass it back to you, mate. What happened? Well, it didn't give us that that downside. In actual fact, it pushed higher, didn't it? On that area. So yeah, it looks like, is that right? Is that the right chart there? Oh, no, that's the wrong chart, isn't it? XTI. There we go. Yeah, there's an entry there. There is an entry there. So to be fair, with a stop loss above and a take profit area there. So market's floating around. So, you know, not really kind of picking direction, but there is a potential entry, as I say, on the FTSE. I'm going in again on that one and seeing if we can get it for a trade. And this is a 5-minute bar, is looking pretty good. So actually, even if you use this bar to enter on, then around about the 61, I might just move that a little bit higher to 61. There we go. Let's bring the stop loss to 84. 85 actually. 85. There we go. Okay, mate. That's me. I just wanted to give you a little update on the FTSE there.
Roger D, mate. I will get back to. I won't spend a whole lot more time because I think, as I said, every single trade is going to be very, very similar because it's US dollar based at the end of the day, for me anyway. And I'm going to go now to pound Kiwi because I was asked to do that, and I can't remember who by, but I'll find it. It was Helen. Okay, pound Kiwi. Here's what I see on pound Kiwi. On the weekly chart again, because I want to get a very strong overview of what is actually taking place. And the only thing I can see here on pound Kiwi is downside, interestingly. I don't see anything else.
Sorry, mate. Just to give Brian the levels, it's 64,
Yep.
61, 64, 61 entry, 64, 84, 64, 85. Sorry, 64, 61 entry, 64, 85 stop loss. Sorry, buddy.
You're right, mate. No drama. It's got to get through this level, and it looks to have got through that level for mine. So I think a retest here. Any rally here on pound Kiwi, I think, is a sell. I do believe that's the case. And look at this here. Wow. If we were to reach that level, then things change a bit. Strong support level right there. And I don't know if it's got any horizontal significance. Yeah, there's maybe a little bit there. I wouldn't say it's the best level on the world from a horizontal point of view. That probably exists down there a little bit further. But you can see that area is beckoning price as far as I'm concerned. So I think a rally on pound Kiwi would definitely get me interested short. Back to the weekly pivot would be okay, and then go. So that's my opinion on pound Kiwi at the moment. The Aussie was another question. And guys, I don't know how many of you, because I can't see who's in the room until you ask a question, but I don't know how many of you are actually from the US session. And if so, I want to know how many of you are still in Aussie US dollars short, long, that we took on Thursday evening. And we took it on the 30-minute chart. And I want to know because you shouldn't be, but I am. So do as I say, not as I do. Look, you've got many options when you take these 30-minute trades. And I gave you a TP1 only. I think I didn't give you a TP2. But TP1 on Thursday was here because we're at a resistance level. And this is the game we play, or I play, when I'm trading 30-minute charts. As soon as I hit resistance, I'm taking profit if I'm going long. As soon as I hit second resistance, I'm taking more profit. So that was your target right there because it was DR1. So on a 30-minute chart, you were risking, actually we risked a lot on this. We risked 40-something pips on this because we got our stops right under here. Yeah, 45 pips or something like that. And our first reward was 20, half that, 22.5. And your take profit was a bit better than 1 1/4 to 1 or something like that. So you should have got out there. I actually scaled out there. I didn't get out there and moved my stops to entry, which was here. So I'm actually still in this trade. And guess where I'm at? I'm at exact point, well, I'm just a little bit above where that second take profit was. I shouldn't really be fiddling with this too much. I just want to give it a little bit more opportunity to go, guess where? To the next level that is significant. But are we there? I think we are pretty much there, and that's why it was TP2 at the end of the day. But I still sense that there's something going on that may force this a little bit higher, maybe even to the next level. And when I looked at this scenario, I thought, okay, we've gone through that level. Definite retest on the cards. I can't see anything but that. But I moved my stops up pretty tight here. And if it comes back, then fine. But if it keeps going to the next level, which is kind of in that vicinity, maybe there, actually, I'm being a little bit ambitious. Maybe there's another nearly 200 pips available. So for the risk of 20 odd pips on not much left in the trade, I think that's a reasonable reward to be looking at. So when I say risk, I'm at no risk. I've taken 2 lots of profit, but there's a little bit left here. And if I can get this up another 200 pips, then it becomes a pretty decent trade. As I say, I don't know how many of you in the US session and would have taken that. I see there are a few. But the reason I'm going through this is because, Chandra, you've asked the question, Aussie dollar short. And it's exactly the same as, oh, good on you, Helen. Good work. Yep. Awesome. That's what you should have done, Alan. You should have taken the profit. You really should have. Sold it off. Not sure what that means. I'm out last Friday. Awesome, Swee. I'm out. Awesome. You should be. You've done exactly the right thing. I've just got a little bit weird here, and I don't expect it's going to go, to be honest. That's why I've got my stops really tight. Excellent. I'm really glad to hear that you guys have got out of that, because it's exactly what you should have done, because that level there was the level to get out at, which was 69.82. Absolutely. Well done. Pleased to hear it. So am I short bias the Aussie? Yes, I am, interestingly enough. And any time now, any time at all, because we are at that significant level on the weekly pivot, a la what I was talking about on the euro US dollar. And wow, you couldn't see me for dust if this came under this trade line and retested it. I don't expect that would happen quickly, however. I think what we may be doing with the dollar pairs is probably going little bits backwards and then consolidating. That's my thought process. It's also a good thought process, because once we start to do that, we can then start to trade my favorite, which is top to bottom, right? Top to bottom, top to bottom. So that's the kind of area I'm starting to think we're just about to enter. And for that reason, I start to get a little bit more excited than I have been for the last few weeks, because we have been trending. And trending, especially in super fast terms, skyrocketing, is not where I need to be. Okay, what else have we got? I think we're just about caught up. So Aussie short, yep, short term, I think. I'm happy with that. It's Paul B's birthday, in case nobody knew. Send him all a happy birthday. I mean, send him a happy birthday.
Didn't know that myself.
There you go, mate. Well, I didn't know it. Well, I probably did. It's probably in a diary somewhere. But you know what I'm like with diaries. US dollar CAD. All right, let's go US dollar CAD. And if you can imagine an overbought scenario, an oversold scenario, this probably looks a whole lot like this. That's a weekly chart we're looking at, right? And you've got 3 black crows sitting there like you wouldn't believe. But can you get into a short here? No. Can you wait for a retracement and get into a short here? Hell yes. This is the one that we missed, really. I mean, I was so keen to get short this, it wasn't funny. But we didn't really grab the opportunity. I think it happened on a Monday morning on an hourly chart, if I'm not wrong, last week. Monday morning. Yep, there it is. I'll have nightmares about this bar here. That one right there. That was the entry level. That was the entry bar. And had we been willing to break our rules at that point in time, taken 41, even if we'd gone to the conservative level and taken a 76 pip risk, we would now be 5 to 1-ish. But if we'd taken the 40 pip risk, we'd now be 9 to 1-ish. We didn't. So that is a moot point. But yeah, I remember that very, very well. I was busting my boiler to get into this short. So no trade yet. Weekly pivots, why not? Breakout level, yeah. I'm definitely still on board this short, no question. So can't get in just yet, but we have to wait. We definitely have to wait. Mate, I think I'm up to speed. So I think I've given you the idea, guys, that I'm looking for reversals and I need to see them clearly before I take them. But if and when they come, I will be certainly jumping on them. As long as they don't happen on hourly charts on Monday morning, I'd be very, very happy, or any time through Asia session, because I just don't trade. It doesn't work for me. And that's the reason I don't do it. Too many losses over too many years. So no, I'll still be waiting on UK session and now the US session to find a meaningful entry. And yes, they won't be long. I can promise you, nothing will be long against the dollar at the moment. And I know that sounds weird because I'm a dollar bear, but I know we're due for retracement. And if the dollar can come back to 98, then most of these should have had that nice little reversal at that point, and I'll be happy to trade them. So no trades, mate, but some very firm idea on what I'm looking for this week, and it is
Brilliant.
for the boat to come back to my side.
Brilliant stuff. All right, buddy. All right, well, let's wrap it up. We'll be back later on, obviously. And we will talk about some shares that I think are quite interesting at this particular level. And I will show some guys the charts on that and see if there's any other opportunities. The shares that we have been talking about in the show so far are flying. The EasyJet continues to push to the upside. Aston Martin another 10% up today. So I'm going to try and pick you out another one, but I've got something that I will bring you later on, and hopefully we can get our little orders in the market and see what happens.
Just to clarify for Alan, mate, you're keeping the short, right? Did you hear me, Ash?
Sorry, buddy. Yes, yeah. The short. Yes, the short. Well, it hasn't been triggered yet, so yes, the short order is still staying in the market at 64.61.
And to answer your question, Sanjay, either or, it depends on where you get into the market, right? So let me give you an example very, very quickly, because we do have to fly. If you were to get into the market right now and you wanted to trade, what crosses this, euro dollar, if you want to trade this long and enter the market right now, you wouldn't, because you'd be trading straight into the daily pivot. But that aside, if you got into the market right now, you've got to take profit at DR1. That doesn't necessarily mean you have to get out at DR1. You've just got to take profit there. So get something off the table and make yourself safe. And the reason is pretty clear over time. If you put, and I've shown this to 100,000 people, I'm sure, but if you put if you extend your pivots so that you can see DR1 and DS1 going backwards, and I've done that exercise in the show, I think you'll find that price will bounce off DR1 more than it won't. So you've got to take profit there, but it will bounce off DR2 almost 99% of the time if it hits DR2. So that's where if you're trading on a 30-minute chart, you're not trading a trend, you're not trading a breakout as such, you're trading from a level to a level. That's all you're doing. You're really only trying to take that gap out of the market and put it in the bank. That's all you're trying to do. You're not trying to say it's going 100 pips. You're not trying to say anything other than, I like the fact that we can go from here to here and bank the profit. Anything else that happens after that is really a matter for the record. And I don't care. I don't care what happens after that, because here's where I make my money, in that gap, taking profit from in between the pivots. That's pretty much what it's all about for me. So I hope that's right. In your book, DR1 and DR2 are both exit levels. Depends on where you get into the market. Right, mate, I'm done. Are you done?
Yes, I am. Yeah, sorry, Alan. I just I'm guessing you're probably talking about on my own account. Yes, I am keeping that short on my own account as well. So the company account, I'm putting in another order. On my own account, I'm just keeping everything where it is, and I'll show you how I'm going to manage my own account later on. You know, if the market pops up, we'll talk about sort of like ways to mitigate any issues to the upside. Okay, no problem. No problem at all. All right. Well, we'll see you in the US show in around about, what, 5 hours, is it? Something like that? It's
4 hours and 44 minutes and some seconds. Yes.
There you go. And it's your music week, mate. So we are bated breath.
Oh, mate, got a treat for you. This is this is all about ballads this week, and
Oh, yeah.
we're going back to the wild west of America. You should have some fun.
Amazing. All right. Okay. All right. See you guys in the US show later on. For the rest of you, see you tomorrow. Same train time, same train channel at 5 to 8.
That's the date. Don't be late.